Welcome to another great episode of Great Grace and Growth, the podcast where we dive into all things that help you grow and thrive in both life and business. Again, I'm your host, Laura Navaquin, and today we're talking about the subject that affects all of us, and that is investing and growing your money. So, whether you're just starting out or looking for ways to improve your financial strategy, today's guest has the insights that you need to take control of your financial future. Joining us today is Genevieve Anderson, a seasoned financial professional and coach with over 13 years of experience in finance. Genevieve combines both her professional expertise with her own personal story and financial recovery to help others build a system that manages cash flow, improves money mindsets, and invests to create the life they love. Today, we are going to share key investing strategies and practical next steps for growing your wealth. You don't want to miss out on this episode. Genevieve, thank you so much for being a guest on Great Grace and Growth. Welcome to the show.
Yeah, thank you so much. I'm excited to be here and thank you so much for having me.
How did you get into finance or finances altogether and go down this line of work?
Yeah, so I started actually working in the bare bones at a bank. I
Mhm,
would say 13 plus years ago. And it was just
mhm,
on a whim, on a recommendation of a friend. She said, you get to meet a lot of people. I think you'd really like it. And
mhm.
I actually find that now, 13 years later, and being able to coach people, it's a real advantage because I got to meet with hundreds of people and talk to them all about how they're stressed with money, how they handle their money, what kind of pain points they normally come in with. I got to eventually, as I kind of went up the ladder, I got to meet with millionaires and people with multi-millions and understand how they handle their money and what are the differences. So I think having that background really gives me a nice wide breadth and was a great way to get into the industry. So since then, I've kind of switched around my career a little bit. I work more now in operations and I started to really miss my one-on-one clients because I just love having that connection with people and watching
Mhm.
my clients make progress. And so I started coaching about 3 years ago and really try to focus folks on how we can both connect the mindset around money and then
Mhm.
also practical things and education. So I try to cover both inside my coaching program and I really love it. Yeah.
Would you have been a financial advisor at the
So I
bank or?
started, yeah, I started off just as a banker that you would see,
Okay.
when you walk into your lobby, and eventually grew
Okay.
my career into the advisory portion of the bank. So I worked in private banking. Yeah.
Okay. Yeah, I love that. And then with
Yeah.
Holistic Personal, which is your finance coaching business now, do you
Yes.
offer one-on-one or are they group settings, or is it just the information that you're providing out to your clients where they're able to do training at their own pace? What does that look like for somebody who works with you through Holistic Personnel?
Yep. So currently, sorry, currently,
Hmm.
I just work with customer or with clients one on one. So it is
Okay.
a very intensive program. We usually take anywhere from 3 to 6 months to work through the program, and we really deep dive into all aspects of their finances. I love
Hmm.
doing this too because I honestly think that yes, it's great to learn how to pay down debt. Yes, it's great to learn how to invest. Yes, it's great to learn how to save. But if they're all not working together, sometimes you're still kind of stuck where you used to be. You don't tend to make as much
Hmm.
progress. So we really focus on understanding our clients' money mindset and helping them create really healthy habits moving forward so that they're not just changing for the time being, but these are habits and new things that they're taking on and then they can take on for the rest of their days
Yeah, that's
and pass
great.
on to others, which is always
Yeah, and
good too,
ultimately just
right?
give that education to others, right?
Yep.
And I know that speaking finance or money altogether is often people tend to be intimidated by just speaking about money, finances, investing, especially if they've never done it before. Do you have any practical steps to break down some of the most important skills that somebody needs to have or can implement when they're first getting started with even considering investing?
Yes. And I would almost like to take that back a bit and just
Mhm.
really acknowledge that the financial services industry has not been a great representation of women and of other people, historically speaking, right?
Mhm.
And so I think it's important to acknowledge that a lot of people, especially a lot of women, may be feeling the same exact way. If you're feeling a little bit intimidated, I think back to my years in private banking, I was one of two ladies on a 15 to 20 person team, right? So there's just not a great representation. But I think something that you want to make sure that you can do is just understand that one, money is not everything in your life. However, it
Mhm.
affects everything in your life. And if something is affecting every aspect of your life, it's really, really important that you understand it and that you take control of it.
Mhm.
Don't give that power away to somebody else, whether even if that person is close to you, right? It could be a
Mhm.
spouse or a parent or somebody that you trust. And then two, I always like to tell people you can do this. Like you don't need a finance degree. You don't need, you don't need any sort of like fancy qualifications.
Mhm.
Um, a lot of people might tell you that, or they might say, I have fancy qualifications. Trust me, right? You don't need any of that. You can learn to do this. And that's one thing I really love about investing, specifically, even like in the stock market, because it does take not that much time relative to the time that you spend invested to learn. And
Mhm.
so doing things like just even following along on social media, reading,
Mhm.
picking up a book that you might not normally have picked up. You'll start to really get the grasp of the language of investing, the language of finance. And the more you do it, the more comfortable you're going to feel. It's just like anything else that you would learn.
Money is not everything, but it does touch and it affects everything in our life and to some extent. And we're speaking about investing right now and perhaps ways that someone could get started or even enter the idea of starting to invest. But let's take it even a step prior to that. What about even, I guess, analyzing our money in the sense I'm saying that all of us are looking as to cut costs or just figure out our money because it's so easy to use a debit card sometimes and we're not always visualizing that money leaving our accounts versus cash, and some people are really great at
Totally.
that. But I think for the consensus, the majority of the population, sometimes we swipe our debit cards so easily, but being able to be mindful of cash, so like subscriptions that we're subscribing to, using our debit card on a regular basis, do you have any particular steps that the average person can implement to start using money the right way or just keeping track of cash flow and creating healthy habits with our money?
Absolutely. And I think that's so important. And one thing that I teach in my coaching program is all about intentional spending and using
Mhm.
saving and spending intentionally. I always say I'm not a huge, and this is, party of one over here, but I don't teach really strict budgeting because I do
Mhm.
feel like really strict budgeting, at least in my particular opinion, is almost aligned to like a strict diet. It's
Mhm.
fine to maybe get you back up on your feet. It's fine for a quick fix, but are you really learning any skills, any habits that you're going to be able to maintain for a long period of time? Mm,
Mhm.
Probably not.
Yes.
So I think that, a budget is really important in the beginning to help you understand your cash
Mhm.
flow. But from then, you really have to start implementing these intentional spending steps. So that
Mhm.
means usually it means creating friction or space in between you and the end product.
Mhm.
And you could do that a variety of different ways. You kind of mentioned one there, right? Reviewing your subscriptions, right? Or not having subscriptions or deleting the ones that you don't use or deleting all of them and then just re signing up when you need it again.
Yes.
That's a great one. It could be, and everybody's triggers are going to be so different. I have a lot of clients who have triggers along the lines of, like convenience,
Mhm.
so understanding that convenience. When is it really worth it to you? When is it not really worth it to you? When could you possibly eat at home? And when is DoorDash actually really worth it because your family is freaking out and hungry and we just need something right now on a Sunday night?
Yes.
You know what? So understanding what is going to almost get like the most bang for your buck,
Mhm.
and understanding what you really like to spend on. I always say, I think in the personal finance community, we spend a lot of time talking about saving, cutting, saving. I don't think we spend as much time as maybe we should around spending. It's okay to spend your money, and let's understand, what do you really love to spend your money on? And I always love hearing the results from clients. Like, I've had clients who are really into like nails and nail art. Cool, go crazy on it. But then they're like, I eat everything at home. I
Mhm.
have other clients who are really into fitness. So cool, spend that big chunky amount at the gym, but they're not really into traveling as much.
Mhm.
So understand what your real wants are to design the life that you really want, and then go for it, but then cut all of some of the other stuff aside is a good way to do it.
Points. But the thing that I actually speak often is thinking about when we're incurring debt isn't necessarily always a negative thing, depending how we're doing that. And then I know that that's where I'm saying it could be controversial because I teach often within my community of real estate investors. Sometimes individuals look at obtaining debt through whether it's a hard money loan, a private money loan, a mortgage,
Mhm.
or whatever it may be, as scary or intimidating because it's debt, and especially when you're purchasing a property, it's high amounts of debt at times. But depending how you're going to utilize that, it could be a moneymaker in the long run as well, and also building assets and wealth as well in that regard. So I know that one's kind of a controversial one, but I wanted to inquire with you because you mentioned that point. What is your viewpoint specifically about incurring debt?
Yeah, I love that point of view. Honestly, Laura, I also invest in real estate as well,
Mhm.
and I am so tired of hearing the trope of all debt is bad.
Mhm.
I don't subscribe to a lot of one size fits all finance. I think it's
Mhm.
very, very individualized. And I don't think just because I think a lot of times there is an understanding that, oh, you have debt, you must have done something bad.
Mhm.
Like that's how we look at it. And
Mhm.
unfortunately, people who then have that debt, they look at themselves like that. And I hate
Mhm.
that. It really drives me crazy. And I always say, like, I am so happy I have incurred debt for a lot of things in my life. I use debt to finance my MBA. That MBA got me a pretty great raise. I'm happy with that. I use debt to finance a divorce settlement. I really needed out of that marriage. I'm very happy that I took out that debt. It was a pain to pay off, but I did it, and
Mhm.
I'm in a better place for it. And I think the same thing you could be said with real estate. We set up like an Airbnb a couple of years ago, and oh my
Mhm.
gosh, it was so stressful. Those bills are just adding up. You got to buy all this furniture. It takes a lot of time and money to do
Mhm.
those things, but now we have it and it's running, and I'm so happy with it. And
Mhm.
it's taken a couple years, but the debt's all paid off and we're good to go.
Yeah.
So I think the important thing with having debt is understanding what the purpose is. A lot of
Mhm.
times, if I ask somebody, hey, where did you get this credit card debt? Some people may have a very solid answer. I went through a crazy emergency, right? Or they might say, I had a medical event. Cool. I invested in my business, or I invested in myself in some form or fashion. Great.
Mhm.
We have a really clear idea of where it came from. When somebody says to me something along the lines of like, I really just don't know, that's when we need to really look into it and understand, okay, if you are not sure where that debt is coming from, now we may have a problem and we really want to identify what's going on. And if you
Mhm.
have a debt pay down plan, that's really important. And honestly, I would say that's almost a prerequisite to investing.
Mhm.
It's okay to have debt, but understanding what is this debt for and how am I going to pay it off and what is the plan for that? If you have those things in place, then I think let's go ahead and start investing. But if you don't have those things in place, I think those are important to get in place prior
Yeah.
to creating your investing plan.
So true. I completely agree with that. And then I want to take our conversation back over to investing specifically. Are there any, and I know you can't necessarily say one size fits all because that's never the case with anything really. It's lifestyle circumstances, budgets that are allocated or whatever it may be. But do you have any preferred or recommended approaches to investing, whether it be in stock market, real estate, Bitcoin?
Yeah, of course. To me, investing in the stock market is I would recommend it for, I would say 99% of folks. And there's the
Mhm.
reason why is because it's, again, it's a low hanging learning curve. I would say
Mhm.
if you read a couple of books, you maybe take a course. Again, you don't need any fancy degree to understand. Once you get the hang of it, you can put your plan into action. And not that it has to be totally set it and forget it, but it is
Mhm.
fairly a low lift. And so I think when you look at the investment of your time plus the investment of your money, you get pretty great growth. So that's probably my recommendation for the vast majority of folks. I do also think it's really important to be diversified. So if you have real estate investments on top of that, awesome. If there's a ton of things that we can invest in and I've heard some really creative ones, people invest in art or in collectibles, or you're investing in your business. Business owners have an investment in their business because they typically will sell it, at retirement or pass it along down. So those are other amazing investments, but in my experience, they do take a little bit more on the time and education, whereas investing in the stock market tends to be pretty low cost when it comes to the time that you need to put forth.
I know that when I first got into investing in the stock market myself a number of years ago, it all kind of started or stemmed from getting stock at a reduced rate when I was working at a health insurance. So back when I was in
Oh,
corporate,
cool.
they would give
Yeah.
reduced stock
Yep.
options to purchase. And so I was like, oh, I guess like I didn't even know anything about stock at that point in time, very limited. And
Yep.
going in and just taking that step to buy stock at reduced amounts. And it had been so rewarding, and even though although I had let it sit there for so long, aside from other things that we've done like 401ks, but with that stock that I initially bought, and I know a lot of employers do offer that if they're a public company, highly recommend for anybody who has that as an option to take advantage of it, even if it's, a little bit of money that you're allocating from your paycheck on a monthly basis to purchase that stock, because it always kind of comes in to play too if you need like you have a rainy day or just saving for the longer term. And I know for myself and my husband, we kind of forgot that we even had that money there. And
Yeah.
it came back to be a benefit later on when we decided to start scaling and growing our real estate portfolio.
Yeah. And I would say one other thing that I really love about stock market investing is that it's very accessible. It's so much more
Mhm.
accessible now than it used to be. So whether you're taking and if you are, trading options, I would highly recommend you definitely need a little bit more education on that. You want to understand your puts and your calls and you
Yes,
want
that's
to
what I was
have
trying
the
to remember.
time available to understand and to look at the trends that you're looking at,
Mhm.
and understand what the purpose of your puts and calls are. But as far as like, buy and hold strategies, we have so many options for folks. You can use very low cost robo advisors nowadays that
Mhm.
are great. You put in your goals, and we're in an age of AI. This stuff
Mhm.
really, they're looking at all of your goals and they're making your portfolio for you. And it's done at a very
Wow.
low cost. And you sit on it, you write, you put in however X amount every single month, and that is going to really snowball and help you meet those long term goals. Most of the time, right? That's maybe retirement, early
Mhm.
retirement, things like that. So that's what's really exciting too is that we are in a day and age of like things are super low cost. You don't have to like call a broker
Mhm.
anymore.
Yes. Yeah.
um, even in the 10 years that I've been working in the industry, like we had robo advisors, but they really were not very good. And
Mhm.
now, honestly, I would recommend them to somebody who is a little bit perhaps shy about creating your own portfolio, use
Mhm.
something like that. Use the tools that are available to you to help.
The other thing that made me think of, you don't have to call a broker any longer, but even then,
No,
I've noticed in the past decade or so is that even the cost for transactions is lower now than it was 5, 10 years ago. So making it much
absolutely.
more affordable.
Absolutely. So there are tons of low cost index funds, ETFs. These are broad based funds. You buy one and you get
Mhm.
access to a ton of different stocks and bonds that are already in there, which is amazing.
Mhm.
And most of these will cost, I would say, under 0.2%, which sounds extremely low. But really,
Mhm.
anytime you start getting over that, it eats into your return a little bit. So if anybody's
Mhm.
listening and you're like, huh, am I investing in low cost things? Let me take a look. I want you to go in. I want you to take a look at what's called the expense ratio. That's just a
Mhm.
really fancy term for fee, and check and see what they are. And hopefully they're under that 0.2%. And if they are, then you've generally got what's called a low cost funds. But to your point, Fidelity, Charles Schwab, all these big companies are offering a lot of these for like zero transaction fees.
Mhm.
So really the cost to start investing is just continuing to go down, which is I find very exciting.
So I want to ask you too. You mentioned Charles Schwab, Fidelity. There's so many different platforms and banks to be able to go and invest or to trade within. Are there any particular platforms that you recommend over another? And if so, why would that be?
Yes, I would definitely look for anything that has a reputable brand, right?
Mhm.
We want to I really like I'll give you the ones I like. I really like Fidelity, I really like
Mhm.
Charles Schwab, I really like Vanguard. If you're looking for kind of more of those robo advisors and a woman-owned company is important to you, Elevest has a great one. If you're also looking for a robo advisor with just a low fee and a very easy to use platform, I also really like Betterment. So
Mhm.
there are a number out there. Those are a couple that maybe to start looking with. I don't get paid to say
Mhm.
any of that. Those are just from I always say that. I don't have any sort of affiliates, but just my personal opinion and from working with clients and
Mhm.
understanding their portfolios and getting their feedback. But you want to go with somebody that's easy. And the other thing I always tell people is that you can always switch. So
Mhm.
especially when you're opening up something like an IRA or a taxable brokerage account is very similar to like a bank account or a savings account or something like that, right? So if you
Mhm.
really have a bad experience or something's not great, you can switch platforms fairly easily and it's not going to
Mhm.
cost you anything to do so.
True. Well, thank
Yeah.
you for that information. I think we're all jotting that down. I was mentally jotting some of those down because I know who I use, but always open to learning about others as well and taking a look at those. So I want to ask you,
Absolutely.
because I know also when we're talking about money, it also comes back to mindset as well. And I wanted to ask you if there were any particular mindset shifts that you have found to be the most critical for people to adopt when they are looking to start investing or growing wealth or just even cutting costs in their own spending.
Absolutely. The first thing I would do is I always have people take a bit of an inventory of what your current mindset is. And a lot of us don't
Mhm.
really know because we don't really think about it, right?
Yeah.
Maybe you have an inkling, but our mindsets are generally made up of two different things. They're made up of how we were raised.
Mhm.
So, all of the way that the adults spoke about money when we were younger
Mhm.
gets kind of edged into our brain. And
Mhm.
the second way is as adults, and it's typically if you are making a mistake. So, the first one, if you're trying to understand, what was my mindset growing up? A really quick and dirty way to understand that might be ask yourself, what are those phrases about money that you remember hearing when you were growing up? Because we all have them. It could be, oh, money doesn't grow on trees,
It's the
or we
first one
can't
that pops to my mind. Yes.
yeah, it's such a common one. Or, we can't afford that. Or the one that I have in my household was always like, you got to work really hard. You got to work really
Mhm.
hard to build wealth. And so, wouldn't you know it, cut to me 20 years later and I'm working 3 jobs, and the first one in the office, the last one out of the office, right? Oh, surprise, because I think that I have to work really hard to be successful. So we all have these kind of money tropes that have been ingrained to us. And I think it's important to understand those and understand how those are affecting our actions today. Are they helping? Are they creating good habits? Or are they creating unhelpful habits? I don't like to label anything as good or bad, but it could be,
Mhm.
helpful, or maybe these are no longer serving me, so to speak.
Mhm.
And then the second thing is understanding what has impacted our mindset as adults. And typically, what I see is that is through making mistakes. So those mistakes could be, we just talked about debt, right? Oh, I racked up a ton of credit card debt, but I did it for something silly or something unintentional, right? It wasn't good. It wasn't a good use of that debt. Or it could be, I trusted somebody with money and they totally screwed me over. Dang, I don't feel like I want to trust anybody with money now. Now I'm scared. So understanding what those mistakes were, again, how they're impacting you. Are they impacting you in positive or a negative light? And then trying to change those. So everybody's going to be a little bit different depending on what those are. But
Mhm.
overall, when it comes to mindset, right? I always say we want an abundant mindset and we want a growth mindset. So, abundant mindset, we want to make sure that we're coming from a place where we know there's plenty for everyone. I always love that. It sounds so
Yes.
positive. Right? Just because I want money doesn't mean, Laura, that I want you to have less. I want you to have more
Mhm.
too. More is more. We all want more, and that's okay. Nothing wrong with
Mhm.
that. Nothing bad happens when we have more money. Say it over and over to yourself if you don't believe it when I just said it.
Yes.
And the second is that growth mindset. So, yes, maybe
Mhm.
you did make mistakes, but guess what? We've all made money mistakes. I don't know one
Mhm.
person that has not effed up once with money. It
Mhm.
happens to everyone. So, we have to understand that instead of being scared to make the mistake again, we got to be understanding of ourselves, forgive ourselves a little bit, give ourselves a little bit of grace, just kind of like your podcast name, right? A little bit of that grace,
Yes.
and forgive ourselves and move forward and look at it as a learning opportunity for
Mhm.
ourselves, maybe for other people around us too, and a growing
Mhm.
opportunity, and not something like you're bad. I can't, that's a
Yes.
really big one that we see a lot, is kind of like, I'm bad with money, I'm bad with math, I messed up once and I'll probably do it again, right? We get
Mhm.
in these awful hamster wheels in our head. So those are the two big mindset shifts I would say
Mhm.
everybody could work on making.
Those are great. Now, I also do want to ask you, for our listeners who are ready to take their next step into their financial journey, what would you say are the first few actions that they should take right now to start building a wealthier future?
Yes. So the first thing you need to do is you need to understand exactly where you are right now
Mhm.
today. It's useless to make a plan for the future if you don't understand what your current financial state is. And I don't mean like something high level, like, oh, well, I have this debt. I mean, I want you to get into
Mhm.
the nitty gritty little details. So I always tell people, when you're doing, and I call them a net worth audit and both a
Mhm.
cash flow audit. And if you're want to learn more about how to do these, I actually have free templates
Mhm.
in my money guide, which I think I have linked somewhere. So
Mhm.
you can come find me and grab it. But yes, doing that cash flow audit, doing that net worth audit will help you get to the nitty gritty of the details. So I always tell people, as you're doing it, almost pretend like you're looking at somebody else's stuff. Like, I want you to
Mhm.
dig around like you're a little detective. What is the fee that I'm paying on that credit
Mhm.
card, or what is that interest rate that I got going on in that savings account? Really, really understand. Could I close that account? Could I consolidate here? What am I paying for this? Who's the beneficiaries on that account? Who am I sharing these accounts with? Who else do I owe money to? All of these different questions will be answered inside that audit. Am I spending more than I make every month? That's a really big one, right? We want to have that positive cash flow. So I guess that would be the second thing. After you do this audit, if you find that you have a negative cash flow, that is the number one thing that you need to address. Having a positive, I always say cash flow is kind of like the blood of your financial life. You have to have it. It's the blood, it's the air. It is what drives everything else. It's what drives your wealth making abilities. So, really making sure that you have a positive cash flow. And if it is already positive, then start optimizing it. How could you make a little bit more? Apply for that next job or go make that next investment. Then how can you cut expenses by doing something intentional, right? Maybe you're spending money on stuff that you're like, I don't really like that anymore. Okay, let's cut that out and let's spend a little bit more on things that you do love. So those would be the first couple of steps I would absolutely take, is understanding where you are now, optimizing that cash flow, and then you can start making your plan for the future and understanding your goals. And I would always say, try to make one goal at a time. I know we have so many things we want to accomplish, which is amazing. I always feel like I have clients and they have like a laundry list of things they want to do, which is wonderful. You want to save for retirement. You want to send your kid to college. You want to go on vacation. You want to pay off your credit card debt. You want to invest in real estate. It's like, these are all amazing, but let's pick one and then let's start there.
So true.
Yeah.
So many great tips. And I think all of us should go out and figure out exactly, if we don't know already, where we are financially today in order to make plans for the future, whether that's getting out of debt or starting to invest, whatever our goal is in the long term, figuring out and knowing exactly where we are today and understanding why we are there today. And in closing, can you share with everybody, where can they find you online, on social media, and go out and follow your journey as well as seek your services?
Yeah, come follow me along. I show up most on Instagram. My handle is at holistic.personal.finance. I post about, let's see, 3-4 times a week and lots of little tidbits just like this. So feel free to follow along and learn something new. And I don't have any openings at this particular point in time, but I always announce them on Instagram. So make sure you're following along and you'll know when I have one-on-one coaching spots open. And always feel free to ask any questions. I love answering questions in the DM. So send me a message and happy to help with whatever you got going on right now.
Great. Well, thank you so much for being a guest on this episode of Great Grace and Growth, and also just coming on and sharing your expertise with us today. I know that this was a valuable conversation because there are so many different takeaways for everyone else out there, myself included. And I know that our listeners will walk away with a better or a clear understanding, because I know even myself, a better understanding as far as where we need to be mentally with our relationship with money as well, in order to make longer term goals, no matter what those goals are. So thank you so much for being a guest. Thank you for that.
Yeah, Laura, it has been a really fun conversation. Thanks again for having me on.
Thank you.